Hi, everyone. Welcome. So, today I'm so glad that you're joining. I'm going to give everybody a couple minutes to get. Hi, four people who are joining us early. It's nice to see you. I have a very special guest here today. I'm going to dive right into it. I'm Casey Ann Bradfield, but everyone calls me Casey. And I'm a real estate professional with Keller Williams Legacies Realty, which I actually was a part of the launch of the brokerage because I've been in real estate for over 8 years and I've worked in every aspect from buying and selling as a buyer agent to working in marketing to assisting with the launch of that that brokerage in Vaughan, that Keller Williams Legacies Realty brokerage, as I mentioned. And I would say that my expertise in real estate and what really fuels me now is making homes for people that are safe. My big goal in real estate is affordable ownership. And what that would look like is um, I'd like them to be like townhomes that everyone can have equity in, that we have community gatherings in together, we build wealth together, and we have a safe community that people look out for each other. So in the process, we have to have conversations like these so that we can really achieve the goals I think that the Black community and other immigrant communities and everyone as a whole deserves, which is to build wealth for generations to come and to feel safe in their community. So that's me in a nutshell. But I have a very special guest. His name is Raymond McMillan of the McMillan Group. He's a real estate investor. He's a mortgage broker. He has actually been in the lending industry since 1994 after graduating from the University of Guyana with a degree in geography and economics. So he migrated to Canada in 1989. He's here. We have him. He's a brilliant mind. Learning from him and talking to him has been like mind blowing for me. I feel like I'm upgrading in every conversation, and this is just another example of that. So, Ray, can you want to give a little bit more about you and tell everyone who you are?
Right. Thank you very much, Casey. It's been a real pleasure to be here this afternoon. Thanks for also sharing your vision about affordable ownership. So, yeah, I'm Raymond McMillan. I have been in this industry since '94. I call myself the accidental mortgage broker because I never planned to become a mortgage broker. I was more interested in being an investment advisor. And then I got into the industry in the late '90s. Um, yeah, I got a degree in geography and economics, and I have worked independently helping members of our community buy real estate and create wealth. We first started working with first-time home buyers back in the late '90s, early 2000s, and then we evolved to working with real estate investors, um, and then folks who wanted to buy vacation homes, buy homes in the Caribbean and other parts of North America. Um, in more recent years, I have coached a few mortgage agents to make them more efficient, help them build their portfolios. I coached my own son, who's been in the industry since 2015. He now runs the office here in Mississauga. We have been in that office for the last 23 years, um, same location in the northwestern quadrant of Mississauga. And we've serviced clients all across the province, helped them build and grow for the last 23 plus years since we've been in Mississauga.
Beautiful. And what I find so interesting about the work that you do is you're so knowledgeable. And I think that's not just because you've been doing it for so long, but also because you're an active investor. Can you just tell us a little bit about your investment history?
We started doing stuff back in Hamilton in the early 2000s, 2001, 2002, buying single family homes that were probably about 70 to 100 years old, need a bit of work. You put a bit of work into them and then put them back on the market, help a lot of young buyers get into them. We did a few condos in the Albion Road area, similar thing where we buy homes that needed work, some upgrades. And again, these homes were out in the hundreds up to about 125,000. So it's a great entry point for a lot of first-time buyers. And then as my
And
client
where'd you get?
base, go ahead.
Oh, no,
So,
go ahead. Go ahead. I'll ask you after.
yeah, as the client base grew, um, And a lot of our clients are immigrants, mostly from the Caribbean. Many were Jamaican. We started to get them interested in buying property back in Jamaica. Because, I mean, we live in a society where you have these brutal winters. I was trying to educate my clients that you come from a place where you've got this beautiful sunshine. Don't turn your back on that opportunity. You want to start buying homes back in Jamaica. Then we had the advent of Airbnb, which made it easier. So clients were able to buy their homes and use them as Airbnb and short-term rentals. Over the period of time, I looked at doing stuff in upstate New York, Rochester. Then in the last 4 to 5 years, I spent a lot of time in the northeast part of Florida. It's a very different market, lots of opportunities. So I've spent most of my time now in Florida, looking at opportunities in Florida, buying single family and multifamily homes there, and looking at doing some building, some development. And again, our target audience is lower income families. That, the low quartile of the income earner. We're not looking to create luxury homes and go after the luxury market. We're looking at the person who is living in the basic apartment, something that's not the best environment. You want to create a really nice environment for that person. Beautiful home, nice amenities, nice upgrades, and that's our focus right now.
I love that. I'm so glad, because I think that, I mean, the first time I ever lived in a house, I was actually an adult already, right? Because I grew up in these 3-story apartment buildings with my mom. She was a single mom, and she did an amazing job with us. But I didn't realize how different having space would feel like when I lived in a home, right? So it's so important to have that experience, I think, for every person to be able to live in a house and have a backyard and run around. So, thank you so much for doing that. I wanted to ask you, how did you finance your first home? Because now you're building homes and you're selling them and you're on the top level, but how did you finance your very first home?
I had help from a friend of mine I worked with. I worked for him for about 4 years before I got into business myself. I worked for him tirelessly. I put in a lot of extra hours. I never bragged about it. So he wrote a check to me for $10,000, gratitude check, and handed it to me. And that was my first down payment. And then I also got a cash back from the bank that I worked with at the time. And that allowed me to do some renovations, upgrades, and that sort of stuff. So I was kind of fortunate. I mean, I had somebody who he always was pushing me to buy a home. He believed in home ownership, and he just wrote that check for me. It's sort of like a bonus check, but I got it all at once. My 5 years of service, or 4 years plus of service. Yeah.
Wow. Well, don't we all want friends like that in this day and age, right?
You pay it forward, right? You give back to the community, and you help those. Know that it's not as difficult as they think to own real estate in this part of the world. Yeah.
No, of course. And I've been looking at the idea of teaching people how to pull equity out of their homes here so that they could give to maybe or support, their descendants or even their friends or family to own real estate. It's a conversation I'd like to teach people how to have, or like to have with more people, so that we can get more ownership happening. But it's something that I think we really, as a community, have to get around the idea that we have to support other people so that they can rise. I don't know how easy that's going to come to most people, because sometimes I think some members of our community can get stuck in a lack mentality, and I'll speak for myself. I've been in that mentality before, and now I'm realizing how much wealth I have around me when I reach out to people and collaborate with people. So let's dive right into the conversation of the day, because I think it's very related. The federal government announced that there's $10 million in funding available to help 200 Black families afford real estate in the Greater Toronto Area. Great. Sounds great, right? Sounds amazing. What I was thinking in my head was they pick, I guess, the 200 people, right? And let's say they give them $400,000 each. I don't know if that math works out, And those people can go run out and buy the houses. They have no mortgage. They're living happily ever after in their homes. But that's not how it works, right? It's not actually how the program works. And we're going to talk about that right now. So Ray, do you want to talk a little bit about the outline of the program?
Sure.
Yeah, go ahead.
First, this is not the first home buying grant that has been tabled and is around. There are several home buying grants that are around. Many versions of this actual same program. This program, it's unique in the fact that it's actually focused on Black Canadian families. The 200,000 families and the $10 million computes to $40,000 per household. That's what it works out to. So they give me a $4,000 down payment to buy your first, which is great. Nothing wrong with that. In terms of the numbers and its impact on the population, that's the real question. We've got a population here of around 1.2 million people living in Canada who are considered Black. So let's, using the size of the population and the family sizes, that will probably compute to about 400,000 Black families in Canada, using the average family size according to the Canadian census. If half of that population already owns houses,
it's 200 Black families actually. So I think is it 40,000 per household? Yeah.
40,000. So yes, yeah. So it's or 40, 50,000, but somewhere in that ballpark. So we've got about probably 200,000 families who probably qualify for that money. That works out to one household per 1,000 families. So every 1,000 people you know in the Black community, one of them will qualify for this grant. How impactful is that? It's left to be seen. The grant has a cap on the household income, which is $90,000. That will allow you to qualify for a mortgage at 4.5 times your household gross income, about $400,000. Given the average price of a home in Toronto, you are about $200,000 to $300,000 shy of meeting that purchase price. Now, it's a Canadian grant, so if you look at homes across the entire country, then you might be a bit closer. But most of the Black Canadian immigrants live within 3 urban centers: Toronto, Montreal, and Ottawa. And then there's sprinkling in the Greater Toronto area, which is considered more or less Toronto. So in terms of its impactfulness, is it really impactful? Is it really going to change anything for us? Right? There is another grant that's available through the federal government. It's the First Time Home Buyers Initiative, which basically gives home buyers, caps the income of home buyers at $150,000, right? Household income. That takes your mortgage amount substantially higher. The qualification is basically the same thing. It's basically the same outline. So the question I'm asking is, if you've already got this grant in place, that in my opinion is a much better product, what is the need for this new federal grant to help the 200,000 families?
That's a great point. That's a really great point.
Because
they're both shared equity mortgage programs,
same
right?
program, the exact same program. And the existing grant, it gives much more opportunity for young buyers. The Canada Mortgage Housing Corporation has pledged $70 billion to housing across the country. If based on the size of the population, we got some of that money, that number is somewhere in the billions of dollars. So why are we chasing $10 million when the federal government already has billions of dollars accessible to us, not only for buying homes, but for revitalizing the current rental stock within our communities? Because the big challenge many young families face today is that challenge happened before you even get to buying the home. It's the cost of rental. Let me give you an example. When I rented my apartment, I paid $500 a month in rent. My gross household income was close to $50,000 a year. So my
Mhm.
rental outlay was 10% of my gross income. So it allowed
Right.
me to save money. It will allow you to save money. Today, the income is, let's say, $100,000 a year, but your rent is anywhere between $2,500 to $3,000 a month.
Hmm.
So your percentage income is almost 25%.
Yeah.
That's the real challenge. If you can't save money, how are you going to buy real estate? So let's step back and forget the grant for a minute and start revitalizing the rental stock in the city, in the large cities, so that young families, young graduates can leave their parents' home and go rent a place for $1,300 a month.
Hmm.
Those are the
Interesting
rates,
point.
as opposed to giving 200 families 40 grand. It's a
Well,
drop in
there's
the bucket,
something there's
in my
there is
opinion.
something to be said about having access to, like, I guess, nicer rentals and nicer places to live and more affordably. But the ownership piece, I think, is very important here still. And I know, and because I care about affordable ownership because of the fact that I think that once you're starting to build equity, then there's more to pass on later down the road. And I think that whether I think that affordable rentals still isn't going to be the solution in our community, right? Do you agree or do you disagree? Thoughts?
Well, first of all, homeownership is not a right, it's a privilege.
Mm-hmm.
That's the first thing you have to understand. It's not your right to own a home, it's your right to have affordable housing, whether it be a rental home or some sort of shared community. But it's not your right to own your own home. That's a privilege. And you have to work towards that privilege. So by making the rental stock more affordable
Mm-hmm.
and more adequate, home, like, there's no apartments being built in the Greater Toronto area in the last 50 years. So we've got to challenge the federal, municipal, and provincial government to build affordable rental units so that young people, when they finish university, can
Mm-hmm.
start to build on their own.
I understand. So that we have opportunities to save so that we can
Yes.
then go and purchase and
So
own.
if our housing outlay is 10% of our gross income, it gives you the
Mhm.
chance to save money. So in 2.5 years, you can save your $30,000 or $4,000.
I get it.
You don't need a shared program anymore. You go and buy your own home. Rethink the mortgage approval process.
Hmm.
Um, you know, the stress test has been a big obstacle to a lot of young buyers.
Hmm.
Rejig the stress test. Let's get back to contract rate approvals. Um, Look at minimum credit scores. Raise the credit score requirement from 680 or 660 to 740. So it forces people to take responsibility of their own financial health. So if my credit score is 720, then I qualify at contract rate. Because we we're also a society of debt today, where many young people are have excessive revolving credit card debt, credit card, car loans, etc. Those are some of the obstacles to getting into the real estate market. So, is the grant the solution? Not entirely. Will the grants help? Most definitely. But let's look at other ways of educating our young buyers into the market. The other option we have to look at is looking at buying multifamily homes as opposed to single family homes. Because if we encourage young buyers to buy duplexes or triplexes up to a four-family home, then you're not only creating a home for yourself, but a home for three other people who can now find affordable rentals. And that solves a lot of our problems. So you can buy a four-unit home with a 10% down payment.
Right. No, I agree with everything you're saying. I just think that the bridge to getting there, we're jumping a few steps because we're talking about the barriers to enter the market, and then we're talking about, okay, if you enter the market, here's how you maximize your asset, through multi-generational purchase, like by buying a multifamily home, you're maximizing your asset. Okay, great. But some of us can't still get there yet. So moving backwards to even being able to afford a home, which is what this program is supposed to do, extend an olive branch. We had talked another occasion in preparation for this, and you mentioned the stress test already. So I want to talk a little bit about qualifying for a mortgage for young people or Black people in general. You mentioned if they didn't consider the student loans, perhaps in the debt assessment that they do when you're qualifying for a mortgage, perhaps more people would be able to qualify for a mortgage. Can you talk about that?
Yeah, I mean, a lot of the young people when they come to university, they're faced with tremendous student loan debt. You got $25,000 student loan debt. You're paying between $500 and $700 a month in that debt over a 5 or 10 year period. That can significantly affect your mortgage qualification. We expect young graduates' incomes to increase over time going into the future, not decrease. So why not remove the student loan debt from the mortgage qualification process and have those young people get in to homeownership? Because we have to remember that the real estate sector is one of the biggest drivers in the economy.
Mm-hmm.
People
Yes.
buy homes and every other business benefits, right? People buy cars, they buy furniture, they get lawn care services. So the more homes people buy, the more growth the communities and the entire overall economy sees. So if we remove the student loan debt, we've now basically allowed young buyers to get into that real estate market a lot easier than today. Right?
Absolutely. And then you said
So
something
you
interesting.
have that criteria. You just want to, the key is, we use a credit reporting process that is very easy to understand. So if the person shows a lot of responsibility in managing their debt, why shouldn't they get favorable treatment? You follow what I'm saying? So if my credit score
Say that one
is,
more time.
if a person shows responsibility in managing their debt, why shouldn't that give them favorable treatment? Why shouldn't the person with a 720 credit score get preferential treatment in terms of waiving the student loan payment, allowing to qualify at 2.4% as opposed to 5.25%? That sort of stuff, and give that person the opportunity to get into the market sooner.
So you think if they exercise responsibility via their credit score, that they should be able to have preferential um, rates in order to, and then can therefore go ahead and qualify for a
Yeah.
mortgage at a
Yes,
more
I do.
expediently.
I do because
Yeah.
it exists today. Because if your credit score is below a certain threshold, you still can get a mortgage at prime bank. You have to put an alternative lender. So why not extend the same underwriting criteria to first time buyers or young buyers, right? And then have those mortgages underwritten through the major banks. Give them the opportunity because they only grow. You got a 25-year-old graduate coming to university with an engineering degree. His income will only increase. So why should we limit his purchasing journey or delay his purchasing journey by 5 or 10 years when we can get him to the market right now, 25 years old? Right?
Well, why are
So
they being delayed now? Like if you have a if you have a 720
because
credit score, hmm
with the current mortgage qualification guidelines, it's difficult for them to stress this, right? I
because of
mean, even
income.
if yeah, because the income is not sufficient. I mean, if you're making $65,000 a year as a young
Hmm
graduate, 4.5 times puts you around what, $380,000 mortgage.
hmm
You're getting into a very small condominium. If you plan to get married and have a family, that's not the environment to do that in a one-bedroom condo or a studio condo. Now, if you remove the stress test qualification process and that person put at 2%, that 65,000 income will push you up. It would almost double your mortgage
hmm
qualification. So you're up to $700,000. You're now into a townhouse, even a smaller, older semi in many parts of the city,
I
right?
get it.
So
Yeah.
that it's a total different process, right?
hmm Yeah. I like that. I just know that there are still a lot of members of our community that, struggle with getting their credit to that next level. What do we do for them?
We fix it. You can fix your credit very easily. I mean, you fix it. You work towards a solution. I mean, I've worked with several clients, who've had credit scores that were low 600s, and you know usually it's very small things that damages the person's credit. Usually your credit card is not paid on time. It might take you 6 months to get it remedied. It may take you 2 years. But once you know what the issues are that have damaged your credit score negatively, we work towards fixing it, right?
You're right. You're right. I feel like sometimes
Half
we
of the
need.
folks in the GTA are immigrants. Most of us came from environments where there was no credit reporting system. So when we came to Canada, we had no credit scores and no debt, most of us. So we need to educate people on understanding the credit system in this society so they remain ahead of the curve and win. So
Okay.
it's that simple, right? So we've got to create that welcome wagon that when people get here from Africa or the Caribbean, we let them know the importance of having a 720 or 780 credit score and how you keep it that way, how you manage credit and what that credit score is made up of and why it's important. So I don't think most folks get up one day and say, I'm going to destroy my credit. But it does that. But if you understand the process and understand the value of having good credit, then we educate individuals on doing that.
Okay. Thank you for explaining that. Yep. Okay. That will be another seminar we're gonna have to do, or talk about credit. But I want to ask you. There's a question that came up. I think it was Tisha. She asked, what's a reasonable income that we have to be able to afford a home in the GTA? Yeah. What income to qualify for?
I mean, that question. It depends on where you're buying. I mean, on what you're buying. I mean, you can buy a townhouse in East Scarborough for $500,000 to $600,000. You can buy a home in Oshawa.
More now.
Yeah, well, yeah. You can buy a home in Oshawa for $600,000. You get into parts in Mississauga and Brampton, you're coming in at $1 million. So your income, you're looking at somewhere between $200,000 to qualify for a home in Greater Toronto. But what I want to say on that particular point is that we have to move from Toronto. We're not stuck here. There are 25 cities in Canada that have a population of more than 250,000 people. And that's considered a large city. There's 25 of them. Black folks live in basically 3 cities, as I mentioned earlier: Toronto, Montreal, and Ottawa. And there's a sprinkling in Hamilton, a sprinkling in Kitchener, and a sprinkling in Windsor. So if you can't buy in Toronto, what is stopping you from moving to a city where you can afford to buy?
I guess just
keeping in mind that half of us are also recent immigrants to the country. So we weren't born here. We didn't grow up in Toronto. We don't have our entire lineage in the city. So what is restricting us from moving? And I've educated many clients over the years on the moving process. Moving to Barrie back in the early 2000s, moving to Kitchener-Windsor in the 2015-16 time period, moving to Hamilton, Ancaster around 2006. And all those people who have moved lived better. They lived in smaller cities where moving around was easier. A lot of their costs drop. Your car insurance drops. Some cases, your property tax may drop. You have a better quality of life. So the key is pack your stuff, get a U-Haul, and move to a city where you can afford to buy a home. As I said before, it's not a right. It's a privilege. So you have to work towards creating that privilege for yourself.
Okay, I have a friend of mine who just moved to Calgary, and she was willing and ready to up and restart her life, and she was able to buy I think it was a $500,000 house in Calgary. That's beautiful, brand new, 4-bedroom. All the frills, right? Would look like a mansion here. So she's done that, but at the same time, coming from Toronto, being born and raised here, it's you want to be able to live here as well. You're used to it, you're comfortable, and I guess that's the problem. Sometimes when you're too comfortable.
My question is why?
Why we're comfortable?
Yeah.
We have jobs here. Some people have jobs that they're tied to, even after the pandemic. Maybe they're working online, but they feel some sort of devotion to that company that they've worked for.
So I'm going to share something with you, right? In 1996, there was the Olympics in Atlanta. And most of the Caribbean, the Black Caribbean population moved from New York City to Atlanta. Atlanta was not the hub of Black culture, the Mecca it is today in 1996. So a lot of skilled tradespeople moved to Atlanta, and they could have sold their homes in Brooklyn, Queens, wherever they were, and they could buy homes. Same as what your friend in Calgary, they can buy homes for a fraction of the cost. Beautiful homes, 4 bedrooms, sitting on an acre of land, half an acre of land, and they created success and wealth. Since then, a lot of Americans up in the north have moved to other cities and other states. They've moved to Florida, they've moved to Texas, they've moved to the Carolinas, they've moved to Arizona, and they've all done much better than the folks who stayed in New York. Now, I'm not trying to compare the two countries because it's a very different history. But if you drive around America, any part of the US, the one thing you will always see on the highway, I guarantee if you drive from here to Rochester, from here to New York, to anywhere in Pennsylvania, I guarantee you're going to pass quite a few U-Hauls along the road. People are always moving. We've got this affinity in Canada to moving. Right? And we've got these great cities. If you go to Windsor, you go to Cornwall, to Kingston, we got amazing cities with plenty of jobs. Right? A lot of our community work in health. They work in services. So I don't think it's that difficult to move to a city where you can recreate yourself. And the one thing the pandemic has taught us over the last 2 years is that we have to be adaptable. So if you haven't learned over the last 2 years how to adapt and pivot and move, then you're never going to get it. Right? So I think we have to really step back, reassess the situations, and figure out how to get into that market, and how to leverage real estate.
Interesting. I hadn't expected that you would say, get your credit up and move to a new city and you can buy real estate, and that no programs are going to bail you out because it's not your right to own real estate. I didn't expect you to say that, but I'm glad that you did say it. I sometimes feel like it's my right. I'm a millennial. I feel like it's my right to own real estate, and someone should hand me a piece of land right now. I feel that
generation. You're the privileged generation, Casey. See, I'm a first generation immigrant. So I don't think anybody owes me anything. I think it's my job to create what I want to create with what's around me, and to use what's around me to my advantage to do so. But you are correct. The millennials have a different perspective. And, I can't explain what it is. Perhaps you can, but I see it a little different. No, I'm not saying that our governments are not supposed to provide safe and secure housing for us. That's not what I'm saying by any means. We've got to get these apartments looked after. We can have people living in buildings that have leaks and mold that are 50 years old. No, that's a whole different conversation. That's not what I'm saying by any stretch of imagination. We got to get that fixed. But when it comes to buying your home, you got to put the time in. So let them work on creating safe, affordable housing for us so that we can save our money and buy what we need, and do what we need to get from one level to the next.
Oh, yeah. Courtney on Facebook says that moving away from Toronto to get into the real estate market. We're loading. Oh, yeah. It doesn't have to be permanent. It could be something that we do to get into the market, to build equity, and then come back later.
And that is so true. That is so true. The other thing that we can also do, a lot of young people who live with their parents who have the ability to do so, you don't have to buy to live. You can buy to rent and stay with your parents. You can buy that first home, rent it out, and if you're stay with your parents, you're not married, you're single, you have no kids, then you stay where you are and you rent that first home. I have a mentor, right, who's always counseled me for my last 30 years in Canada. And he bought 2 triplexes while living in an apartment in Don Mills. He didn't buy his home until he bought his two investment properties. When he went to the bank, his net worth was already $500,000
Hmm.
before he bought his first home. Or if he did it the other way around, if he bought his first home first before he bought the investment, he wouldn't have been able to qualify for the investment properties. So we build wealth faster through real estate by buying to rent than buying to live in. And we have to remove the emotional attachment to home ownership,
Yeah.
right? It's not an emotional journey, particularly for us who are first and second generation immigrants to Canada and to North America. We have to take as a way to level the playing field and give our families the leg up that they need. So let's get step back from trying to buy this first home with the ensuite bathroom and get into buying a home with a rental unit, whether it's a legal basement, whether it's a duplex, whether it's a triplex or a fourplex, and focus on that process first, the short-term sacrifice to get to the ultimate end goal. And if we do that, if we focus on that, and more of us start doing it, then it becomes the norm. But the norm right now for many Black immigrants is to go to the new builder site and buy a home off of a floor plan that they've never seen in a
Mm-hmm.
community. They don't even know what it's going to look like 5 years from now. That's the current agenda. We have to change that mindset.
Yeah.
So yes, the initiatives are great, the grants are great, all that stuff is great, but we got to figure out what works best for us.
Okay, Orlando says the real estate after party is outside Toronto and Canada. It's also more important to collaborate these days as families and a community. Absolutely, Orlando. And I think Raymond definitely echoes a lot of that sentiment. Yeah.
And that's a great comment. I mean, Orlando is pretty versed in the financial sector. That's a great comment by him, and he understands it. I mean, we have to look at beyond the Toronto market. I mean, there's a city called Dartmouth in Nova Scotia. That's a significant Black history. Why aren't there Black immigrants living in Dartmouth? The Black population in Dartmouth is just the same as the one in Hamilton. It's no different. You know, you have all that Black cultural experience in Dartmouth, Nova Scotia. You can buy a triplex in Dartmouth for probably $250,000. Right? No, it's
Speaking
so
of
and we
Dartmouth,
have to create the communities.
you're freezing. Say that one more time.
We have to create our new communities. We cannot come and become and be part of a community that and expect it to do for us. We have to go there and create it. And you know, we've had communities created here for us in the past. I mean, you know, Malton back in the 80s was a traditionally very Caribbean community, right? But then we've dispersed. We're all over the place now, right? So there's no real, I don't want to call it a Black neighborhood, but we are too scattered.
I agree, but we have to. You mentioned Dartmouth, and so I want to talk about Nova Scotia for a minute because I was watching the BLK. What do you call it? Documentary on that was on Global, or I think, or History Channel, and it was a Canadian Black history documentary 4-part series that was really interesting. I recommend everybody watch it. But it was talking about how people in Nova Scotia weren't able to buy land. They weren't able to own the houses that they were living in for many years. Even in a place where you have almost, I think, one of the longest histories of Black people in Canada. So even though, yes, we can go and find more affordable real estate elsewhere, there's definitely been barriers for Black wealth creation through real estate over the years that I think gives us entitlement. Does it not?
But we have to figure out what those barriers are and how they're being created. Is it a deliberate barrier by a municipality? Is it some sort of very structured racism? Or is it something more than that? We get a lot of these highlights. And when you dig deeper, it might not be what we think it is. I mean, I've had clients who've gone out and bought property in the East Coast with no problem. Several clients, who were from the East Coast, in Newfoundland, um, um, Halifax, and Dartmouth. And yes, that has a lot of socio-economic issues within the Black community. Um, and many Black communities are marginalized across the entire continent of North America. We understand that. But the only people who can change that is us, right? We have to change that. So those of us who have the means to go into those communities and buy and develop property have to do it. Like, as I said to you, I invest in real estate in Northeast Florida. And the communities I go into, they're not pleasant. But I think it's my responsibility to go in there one unit at a time and change it. Right? So unless there's an actual structural barrier to buying property in a city, which I doubt exists today. There are other issues in terms of getting bank financing, and banks decline certain real estate because of the location. And I've seen it many times right here in Toronto. This is a little different. There's certain condos in Toronto that no bank will finance it, regardless of the price. I can give you all the addresses because I've seen them over the years. So that is one thing. So we have to figure out, okay, what is the real issue and how do we fix it? And that's what the initiative should be, right? And that comes back to the grant again. So is this grant the end all be all? The answer is no. Let's get into the real nitty gritty of what the barriers are to us buying real estate across Canada. Let's really focus. Let's sit down with our community leaders and really have real serious conversations, and let the folks who in other cities let us know what those cities are like. It might involve taking a bus tour across the city through 10 cities so we can see it. The real estate road tour. I coined that phrase a couple of years ago when I did investment road tour with clients across Western Ontario. Right? We did the road tours through the cities and we analyzed each city to see what made sense. So let's do it. As I said, it's a whole big country outside of Toronto.
So just to recap and make it explicit for everybody watching, we're saying the real barrier for Black Canadians is the fact that we need to be able to save, and rents are high, and wages aren't high enough, so we can't save enough to afford. And also we need to work on our credit a little bit. We got to get some information so that we can pull it in. And then we have to explore and migrate perhaps as a group, start a movement and go to a location where we can build communities together. Am I summing it up correctly?
Less expensive markets. We're all trying to buy in the most expensive market in North America. It's not only expensive in terms of Canadian context. Toronto is expensive in terms of North American context. Homes in Toronto cost more than New York City. It might sound hard to believe for many people, but the average home price in Toronto is higher than New York City. And New York is a much bigger city. So let's look at less expensive markets.
Okay.
So we have to look beyond it. And yes, the grants are great. I'm never going to say pull the grants away. Yes, the grants are an amazing step in. And the good thing about this grant, it's across the entire country. So if you make $90,000 in Calgary, 4 times your income puts you at almost $400,000. So you're not buying a very nice home, right? So if you move to Calgary, then you're in the market much faster in a nicer neighborhood than if you're in Toronto. $400,000 in Toronto is not going to put you in anything special. It's going to put you somewhere, and I don't want to call neighborhoods. I got to be very careful, but it's not going to put you in some of the best neighborhoods. It's going to put you in a neighborhood that has socioeconomic issues that aren't the ideal place to raise a young family in many cases. So let's dig deeper, and let's go beyond the superficial and try to figure out how do we really make this work for us. You know what I mean?
Wow. Yeah, I agree. I agree, and I didn't expect to agree with you. To be not that I didn't expect to not agree with you, but I do agree with you. I can see where finding more affordable markets is going to open up a lot of opportunities for us, and and even the affordable housing. Sure, give it to us so that we can save up more. Okay, all right. I'm gonna look at my strategy a little bit and adjust. Thank you for passing on your wisdom. I love to learn.
Pleasure.
But I think this is a good place to wrap up the conversation, because there's so much that could be said about this topic. Really, we could talk about every different aspect of the Black community and the needs and where we're going to go in the future and how do we pull up our credit and different topics. But for right now, I think we had a really great conversation.
Thank you.
Yeah, I'm really honored by your wisdom. So thank you so much. Where can people find you?
They can visit our website, McMillanGroupInc.com, or they can call the office at 905-813-4354. We're always there. We're in Mill Creek Drive, 6981 Mill Creek Drive, Suite 40. The door is always open. Anybody's welcome to stop by, have a chat. If we aren't in the office because of the COVID protocols, we can have a conversation by Zoom or by Google. We're always available. And any question you've got, like let's get the conversation going. Let's ask the questions. There's a lot of misconceptions out there when it comes to owning real estate and qualifying for property and what to buy and what not to buy, where to buy, and we don't have all the answers, but we have dealt with a lot of clients over the years, thousands of clients. Of each one of those clients, we learned something that we can give to somebody else. This was a great platform. I had a great time. I hope our audience enjoyed it. And if there are questions they'd love to answer, they'd love to ask us, I'd be more than willing if you can facilitate those questions for us, we would love to answer them.
Yeah. So please send in your questions if you have any. I know James on YouTube, he commented earlier that wealth creation is the key to sustainable, wealth, working. James, what did you say? Tell me your comment again. But he made a really, really great comment about, I think it was, the gist of it was that when you create your own wealth, it lasts longer. I think that's what it was. My mom says that if she had learned this 30 years ago, there it is. Wealth earned creates longer lasting wealth, and the key is learning how to keep it. I agree with you, James.
Definitely.
Thank you. Yeah, my mom said if she had learned this 31 years ago, that her life might be different. So, yes, wisdom is always appreciated. Absolutely. But I also wanted to say, while the questions are coming in, if you have any, that I'm hosting another conversation about wealth creation for healthcare professionals. I'm interviewing a lovely nurse turned mortgage agent on the 23rd of March. And she's going to tell her story a little bit about how she and why she switched from being a nurse for 10 years in going into mortgage and what she's learned about refinancing and the livelihood of nurses, that she can share her wisdom to you. So if you're available, that's on Eventbrite, March 23rd. We'd love for you to join. And I am a real estate agent. I can help you. My mission is to help you make ownership affordable. And I would love to put you in, as Raymond so aptly pointed out, your first multiplex or your first duplex or your first home in general. So reach out to me. I can call me at 647-896-5332, or find me on Instagram if you're a little bit more nervous and you want to take your time. I'm affordable_ownership on Instagram, and you can just DM me and we can have a conversation there. All right, guys. Thank you so much.
Thank you very much, Casey.
You're welcome. Take care now.